going on to the crisis, how has your company navigated the COVID-19 crisis, and what's been the impact on your portfolio? And I'm going to ask that to Stephen.
Yeah, yes. Well, I mean, look, I think I'm going to use the overused, one of the many overused words of 2020 and talk about our resilience. And why we've had that resilience is because, as the topic of this conversation implies, you know, a decent percentage, 3/4 of the Oakley Capital portfolio delivers its products or services digitally. And as a result of that, they're either in a robust position already, they've not had to close down a physical network as a result of lockdowns this year, or if they had a physical operation, they were able to switch. Or if they were a digitally native business, then they've really potentially seen an acceleration of the adoption of their service. That said, you know, the pandemic has caused disruption in lots of ways, even in, you know, successfully operating businesses that haven't had to close down. For example, if you're a software business, you know, your sales effort this year may have been hampered by the fact that you may have had mixed communication with your potential customer base. And in some cases, let's say price comparison, you know, people have been less inclined at the moment, or maybe didn't even need to reinsure their car or take on a personal loan, etc. However, the gain in market share has been big. So overall, we've seen a reasonably robust performance. I think over the course of the year, you'll see our average Ebitda growth come down in comparison. A typical year, Ebitda growth for us has been 25-30% Ebitda growth. Well, at the half year, the full year average was about 17.5%. So you can see that there has been an impact, but more importantly, the profits of these businesses is still growing despite current events.
Well, robust sounds good. Paul, what's been the impact of the crisis on your company and your portfolio so far?
Yeah, so fortunately, NBPE's portfolio had really been positioned to non-cyclical, or at least relatively non-cyclical sectors and companies, or companies where we felt there was a secular long-term growth driver. And we've done that over the last 2 or 3 years, expecting a downturn at some point, obviously not expecting a pandemic. But that has meant that the results of the company have been good. If you look at the last 12 months to June the 30th, we saw revenue and Ebitda growth across the portfolio in the 80% of companies where we report that in aggregate. So again, the performance has been good. I think the other thing I would say is that liquidity in the portfolio has been very strong. And actually, we've had about $140 million of realizations within the portfolio over the first 10 months of the year, which is about 13% of our beginning of year portfolio value. And so again, as much as realizations are an indication of health, then we're pleased to see that as well.
Well, that's good news on the realizations. David, how has the crisis impacted your company and portfolio?
Hi, Annabelle. Yeah, I mean, as I'm sure people are aware, we focus entirely on software and services, and that's an industry which is well known to have had a very robust performance through this period. So from an industry perspective, we've been fine. Portfolio trading has been fine. The challenge of this crisis has been very much the human side of it. It's how you deal with moving people to a working from home environment, how people deal with health issues, because some people are affected by COVID. So the whole human side of the crisis actually has probably been the greatest challenge for everybody, for society as a whole, as well as for our businesses. And we're pleased to have helped our companies work through that. But from an industry perspective, there's really been very few challenges for software.
Well, that's good. And I think the human side of the crisis is something we've all felt an impact on, and we've all had to work through.